welcome to this Friday edition of FreightWaves Now. I'm your host, Anthony Smith, and coming up, we're going to have Andrew Cox giving us a DHL Supply Chain Pricing Power Index update. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Friday Carrier Update presented by PowerFleet. I'm Zach Strickland. We're looking at our outbound tender volume index here in the blue line and the outbound tender rejection index there in the purplish line, moving up with a little slight notch there at the end. Again, tender rejection rates trended higher this week, on slightly lower volumes. So again, the market's still going through its seasonal adjustment here, in October, early October, where we knew that volumes would kind of retract off of end of month volumes slightly. Again, not nearly enough to reduce the strain on a lot of carrier networks, and capacity remained relatively tight. Tender rejection rates still above 26%. No relief there for any shippers in sight, especially at these volume levels. Now, we do see a slight trending downward from Labor Day. Don't think that that's going to persist throughout the month. However, time will tell here in the next week or so what that trend line does. We do have another hurricane, Hurricane Delta. Major Category 3 hurricane targeting yet again the same area that Laura hit just over a month ago around Lake Charles in Louisiana. Hopefully not too much damage there, but it is coming through here in the next several hours or so. And then it's going to track on up, dumping a lot of rain, disrupting carrier networks, et cetera, along that I-10 corridor that already has sustained quite a bit of damage thus far. What is it doing to the market itself right now? I've got our weighted rejection index, and you can see clearly there on the map that we've got those two blue markets of Houston and New Orleans showing a strong growth in weighted rejection index. Of course, the combination of tender rejection rate, weekly change, and market share value, which meant, again, you're weighting that rejection rate change with volumes behind it. So you can clearly point out the markets that have the most volume with the most significant changes to capacity. New Orleans and Houston are showing some of the more significant weighted rejection index increases week over week at this point in time. And you can see there in the dark red just above it is Dallas. Dallas actually calming down. We've got some loosening going on in the Dallas market, whereas we're seeing rejection rates increase right there along the Gulf Coast, right in the path of Hurricane Delta, scheduled to hit here in a bit. So again, Harrisburg, quick overview of the rest of the markets before we look into the more detailed on the Gulf Coast there. Harrisburg continues to show disruption as, again, the seesaw battle between the east and west coasts for capacity exists. Weighted rejection rates high there, also around Erie, Pennsylvania, and Columbus, Ohio, and then Ontario. Actually, at the same time, we're seeing tender rejection rates increase on both coasts at the same time. Normally, it's a little bit of a tug and war. But looking at Dallas, we see our tender rejection rate falling down here under 20%, one of the lowest tender rejection rates for some of the bigger markets in the United States. And you see a reason for that is the fact that Dallas is becoming more oversupplied, or it's having a declining head haul value, whereas it was sitting up here around 75 in August, where that's our outbound index less our inbound volume index. That's an indication that you're going to have a lot more freight, a lot more capacity leaving the market than entering the market. And now it's all the way down around 5. It dipped negative there over the last week or so, meaning that there's a lot more trucks coming in, able to handle a lot of the freight, and it's reducing some of that pressure on capacity in the Dallas market. Again, keeping that tender rejection rate under 20%. Like I said, one of the lowest tender rejection rates for the top 10 markets in the United States at this point. So looking at Houston, down there on the coast, as Delta starts to hit there, Houston being the largest market in the, cone of uncertainty, if you will, or some of its market is in that cone of uncertainty where the hurricane is scheduled to hit. Tender rejection rates jumping up there around Houston, but not as significantly as New Orleans. New Orleans tender rejection rates jumping up to 33.45% after being down around 27% this time last week. So a lot of carriers got their freight moving out of the market. Now they're rejecting it here probably over the next little bit or so as they wait for the damage assessments to come through. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to the DHL Supply Chain Pricing Power Index update. I'm here with Andrew Cox. Andrew, what's the latest?
Well, Anthony, the carriers have gained a little bit of momentum back after a little bit of a seasonal lull, or maybe just kind of a breather in between waves of restocking and waves of imports. So we saw that September is typically a weaker month comparatively to leading into the holiday season. In 2018 and 2019, we each saw volumes start higher and end lower for the month. That was the case also this year. But like we were mentioning off camera here, that chaos has kind of become the new norm. So we've had, I'll break down into some of the segments here, but things are just extremely elevated. They look to be elevated through the end of the holiday season. There looks to be no reprieve really for shippers moving forward.
Exactly. I mean, you look at these numbers, 85 right now, and as you mentioned, chaos being the new normal. This was at 80, 85, just dancing between those two numbers over the last few months, right? Yeah,
it's been upwards of 80, I think, since mid-August, and you'll see why. So breaking down into the volumes here, we've been above this 15,000 value since mid-August, and while we know that there are some of the counted rejected tenders in here, the overall idea and the trend here is intact. The volumes have been elevated. They're continuing to be elevated. We'll talk about some of that consumer data towards the end, but people are spending a lot of money on consumer goods right now. Retail spending, excluding autos, is up 7% year over year. All of that's happening while the consumer surveys of home, both the University of Michigan and the Conference Board, which we spoke about, I think, on Tuesday, those are both hit pandemic highs for September. So, consumers are feeling pretty good right now. They're spending, and the COVID cases are starting to trend upwards, which is definitely a major factor that they'll be watching. But right now, they're feeling okay.
Yeah, definitely a lot of downstream activity when we're looking at the two segments. I mean, manufacturing looking to slow a little bit with new orders starting to ease back from the latest PMI. We see volumes are so high. What does this mean for capacity and rejections?
Well, it remains extremely tight, right? So this is by far the longest time we've ever had above 25% on the outbound tender rejection index. We've always thought that that's kind of the natural ceiling for it at that time. Then carriers and shippers begin to renegotiate, and they kind of bring contract rates back up towards where spot rates are at the time. We've reached it twice before in 2018, but again, that was roughly for 3 weeks. We've been there since mid-August. So it's been a long time since carriers have been rejecting 1 in every 4 loads, and there really is no reprieve in sight, like I said earlier.
Right, and so with this, of course, I'm sure transportation prices are through the roof right now, and a lot of this is going to be consumer facing?
Yeah, a lot of it is, and you're right about the prices. We can take a quick look here. The spot rates, again, what I mean by we're kind of in that broken record territory that we were earlier in the year, back even before the pandemic hit, where there just wasn't much volatility. We're in that pace now. It's not that things aren't chaotic, they are, but it's just chaotic. Chaos has become the norm. So rates are now just under $3 a mile. And let's look at some of that consumer spending data. So this is year-over-year total card spending by day. We've been roughly flat since mid-August. I think we've peaked out at about plus 10%, but right now we're running about +1, minus 1%, which is good, given that there's still 25 million people collecting unemployment benefits of some sort. The unemployment rate is still high 7%. This is actually really good data given that economic backdrop. And the better part for both shippers and carriers is that mix shift that we continue to talk about. People are spending far less on services. There's people that won't be able to take their holiday trips this summer. There's people that may not go out to dinner as much or go out to do many of the services that they're used to doing. I mean, all of these in the dark red are all service-related spending, and the ones that are heavy green are all good spending that moves on trucks. So it's a good thing for both shippers and carriers moving into the holiday season.
And one of the things you mentioned previously on the last chart was that credit card spending. We even saw how it just kind of hovered around that midline even after the suspension of those bonus benefits. So really showing that consumers are still spending with or without that additional incentive. Looking at this data here, showing that new norm, such a drop in airline and all these services as you spoke to, but that high number for online electronics, card not present, so those e-commerce, definitely seems like a new norm with these through the roof, week to week numbers.
Yeah, you made a good point about how the lack of benefits or that second stimulus check, it really hasn't made that big of a difference in the last couple of weeks in spending. That's a very important point. The same thing goes for the consumer surveys. We saw that the lack of benefits in September after they expired in August didn't really hamper or dampen the consumer confidence moving forward. So that's a really big point, and it gives me some confidence moving that even if we don't get another stimulus check, that we'll still have a pretty strong holiday season.
Excellent, Andrew. Appreciate it. Thank you so much. Where can people find more?
You can always go to FreightWaves.com/passport for all the latest. JP's team puts out multiple reports a week, as does I's team. We'll be back there for Great Quarter Guys on Tuesday. Check out that for all the latest.
Excellent. Thanks so much. We appreciate it. And thank you so much for tuning in. That's going to do it for this DHL Supply Chain Pricing Power Index update. Be sure to tune in next week for all the latest. And that's going to do it for this Friday edition of FreightWaves Now. Thank you so much for tuning in. If you want to see more content, be sure to check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.